Good morning everybody, it's Chris here from Serene Education with the 4 majors and that's update for the 19th of October 2011. Hi guys, just going to be going with the 4 majors as per usual. Daily Euro against US dollar is what I'm talking about, and yesterday, very interesting, we had a long period of downside movement, then going into the US session we saw price pull all the way back and finish in the spinning top formation. And that spinning top formation quite important in terms of price actually closing above a prior support and resistance that we are psychologically at 1700. We can see quite clearly we've had a number of resistance areas, well there in particular previously just over here on the 19th, going into the 20th of September. A bit of a failure had to rise just on the 10th and 11th of October, and then a break up, and then we've seen support above it. And yesterday we saw price actually piercing this but not closing lower, so bearish, indecision. Now we're going to see a decisive candle. Are we going to see now bullish engulfing to the upside, confirming this now as a nice support, prior resistance becoming nice support? And if that's the case, then long term we could be seeing another attempt, if anything, at the highs here at 3900 to start with. We've been here before. There's no reason why we can't go there again. And the 50 period moving average is in this way. You can see on the Asian session we've seen a lot of momentum to the upside. CTC on this time frame, the daily, is still bearish, consolidative. We're still seeing upside, but our CTC is not full. We do need to see 4 parts of the strategy in play. At the moment now we have 2 on the red and 2 on the blue. Blue arrow, blue bars, CTC is red on the other side. So still telling you that the momentum is still negative. And if we look at the February retracement figure, we had that failure at the 50% mark. Now we've bounced on 32.8, which happened to be a price support and resistance level, and now we're making another attempt at the 50 period. Notice that we haven't breached it in Asian market trading, so 13,8500 would be our ceiling level, needs to break above, and then you could possibly go to 13,900. But in terms of movements, there is 50 pips in that, so it could be interesting. Break and close higher than 13,8500 during the intraday period could see a potential for 13,900. So let's put all those in. Let's plot all those areas. So that's our high, that's our ceiling high that we were looking at on our daily. So put that in. Next one is this one over here at 13,8500, as I mentioned. That we need to be trading above. If we get above that, then what we should be doing is looking for potential bounce or correction of some sort, and then a continuation higher. Okay, as I move out, you can see the highs, previous support and resistance at this 13,8500 mark too. So you can see yesterday going through today, European session, sorry, the US session last night saw a massive upside candle followed by exhaustion, and we saw price pulling back. That failed to materialize, so we saw a bounce yesterday on the institutional moving average. So if I take that low to the high and pull it back to the bounce, there we go. You can see 100% will take us back to 13,900. At the moment now we're battling with 61.8% on our hourly chart. A lot of indecision. See the wicks getting smaller and smaller as price action. Big candles followed by bigger candles, and then as we get closer to these psychological resistance areas, we start seeing price action on the candles getting smaller and smaller. A lot of indecision, a lot of trading range, but not much decision made. See open and close here, very close. See in the beginning here, a lot of decision, now very apprehensive as price has been going higher. So as I mentioned, as long as price can be trading above these areas at 1375, then we should see further kicks to the upside. We have a 13,8500 as our ceiling level above us. I'd like to break above that, and then we could see extensions to at least a 13,900 as our next psychological resistance, because we've been them in the past, so there's no reason. Failure, however, at this level here would see momentum still losing ground, because this high, if it failed at this area here, would now be forcing a swing over here, and this swing would be, even though it's higher than the previous one, would still be lower than the previous or the all-time high that we have at this time frame, and would signal bearishness. Notice a high swing here, pushing higher, and then another one of equal distance. So almost some sort of a shoulder type pattern. But we all know that shoulders don't always tend to be reversals. We could see this pull back and then a continuation higher. So be aware of that, guys. As it stands now on the hourly, we're trading above all the moving averages, including the institution, so it's looking bullish. The only thing we need to get above now is this 3900, which is stopping us seeing further extensions. So as it stands now, we need to get above at least 61.8 to see possibly 100 being tested quite soon. On our 30 minutes, I've plotted the most important one here. 138300 is our major intraday support and resistance. If it's trading above this green line, then there's potential for further upside movement. If it's trading below that, then there's further chance that we're going to see extensions lower. If I draw my upside trend, a bounce here, then you could see consolidation around this area and then potentially bounce higher. If we fail here, notice the relative strength index on my chart is also running into overbought territory. It doesn't necessarily mean straight away that we're going to see a change in market sentiment, but we're seeing an overbought situation at a price support and resistance level, then we start seeing more indication. However, you can see this candle, the 30-minute candle, needs to close. The previous one looking bearish, more sentiment down at the bottom end. The same goes here for this candle that's in play right now. The 30-minute candle is in play now. You can see that there's more action at the bottom end of the wick. We have been above it, but a lot can happen in 30 minutes. So bide your time, see what happens. The more wicks you see, the more indication that we're seeing potential resistance. Look over here, a lot of wicks. More price action at the bottom, and sure enough, we need a bearish engulfing candle, and that set off the whole chain event. We want to see the same thing here. We want to see a lot of wicks at this resistance level, followed by a bearish engulfing, which will tell us or confirm to us that there's more likelihood of a pullback, and that pullback we could see price going way back down here to prior support and resistance at roughly the 1378.50 mark, which will take us back to the institution moving average. Next up is sterling, good old cable. A daily here again, you can see price action. We saw a noticeable bounce here, 153500, as I've mentioned on a number of occasions, has been a very strong support and resistance level in the past, and sure, we saw a psychological bounce. There we go. Last year September through the latter part of December going into January, we saw massive consolidation at these areas, and we saw a bounce higher. Look at that, almost a full month, half a month on the latter one, and now we saw a correction here, and we've seen a bounce higher. Now in terms of the pullback to where, take an extension, let's have a look at the retracement figures. You can see price action breaking through the 23.6 and heading higher to the next potential target, which was always the case. A buy above here would have seen your trigger line over here. 38.2 was the next one, failure at 38.2. We've seen price pull back now. In doing so, it's actually come back now to a price support and resistance level, roughly around the 15700, 720 mark. You can see quite clearly we've had hesitation along this area. Yesterday's candle, similar to the candle pattern on Euro, the only difference with the Euro though is the candle itself, even though it was a spinning top, closed higher than the previous day. In this case, sterling's candle has closed lower than the previous day. A lot of bearish sentiment here, and we saw price. But you can see the trading range yesterday, quite a long one, quite a significant one. We saw almost 200 pips, the range 200 pips odd yesterday, but however still closing very indecisive in the middle of the candle, so equal distance of wick on either side, confirming that the buyers and the sellers were indecisive in terms of price action or where it's likely to go next. However, what it's done though is it's stayed above this 1700 mark, which we had prior resistance, and support. So if we are to see support here, you can see the two parts of our CTC strategy. We have a blue arrow and blue candle. We however don't have the CTC on either side. What we do see is price trading above the 20-period moving average, okay, which is important. But what we need to see, if we're going to see further extensions to the upside, as we've seen this on the first extension, is we do need to see a bullish engulfing pattern here, breaking or closing higher than the prior day, confirming now that sentiment is looking for more biased upside movement, because we are now trading above a price support and resistance level. Noticeable resistance through the latter part of September to the early parts of October, and then we've had a break and a pullback. So it could be a breakout, pullback, consolidation with a look to continue to the upside. And if that was the case, then ideally the upper end of the range here at roughly the 1580, 85, if anything, could be our first initial target. Okay. Or to start with. You could look at the 38.2 mark as our first initial target intraday, or the 1585. And then ultimately we could see consolidation starting to creep into the trade roughly around the 50% mark, because now we've actually pulled back 50%. We could see a slight consolidation further. If we saw a break and close higher, then we would be looking at 61.8, back up to our institutional moving average, and back up roughly around the long-term 1600 area, which is our very strong support and resistance level on that particular time frame. If I zoom out, you'll notice it. If I make that nice and thick and I zoom out, you'll see exactly what I mean. We've seen a lot of support at this level over the first part of this year. So a break higher just going through January, then we saw support in March, support again in March, support yet again in June, a breakout, a fake out in early July, and a break, and then a consolidation, a slight consolidation at September on the underside, and we saw continuation low when it broke that. So that could be psychologically our next potential target if we find support here. Overall, that would be our next target. So intraday, be aware of that. Ideally, our intraday target could potentially be the 1585-100 mark. If I look at my 30, for example, there's this line over here for the trade. If it trades above this green line, then there's potentially further upside movement. Just be aware that the candles or the wicks on this particular range of the highs are getting lower and lower as we've seen price consolidate. So we want to factor that in. So if we took bodies to bodies, then you could potentially be looking at a potential market change in sentiment as we head higher. Notice on this 30-minute time frame, a lot of indecision in the first part of this morning. Still swinging high. You can see the Asian market finding support very early on through the session, bouncing and trading higher in doing so. So if we look at a Fib projection of this, the high, the pullback, you can see that price is testing the 50% retracement of this initial move. So it's doing 50% of this initial move, and there's a lot of indecision creeping in. However, what it's done just recently is it's traded above the 200 period moving average. Notice for the first time in as many days, the institutional moving average was breached yesterday. We didn't see that last long, because what happened was we saw a turnaround and a bounce higher, a failure yet again at the institutional moving average, but the second attempt has seen a break higher this morning. So if anything, we could see 1575. If price can actually stay above 157500, then we could see a push higher to at least the 61, which would take 61.8, which would take us back to this resistance level at 1579.90. Break above that, and this downside trend would look at potentially 100% of the initial move here, taking us back to prior highs that we saw back on the 17th, 2 days ago. So be aware of that. That's how we pull it together. If we see a notable correction here and a bounce on the 30 minutes, then we should be potentially looking for further upside movement. The CTC is in our favor to start with. If we see price breaking above this 50.79 mark at this level, then you can see that the highs, which are getting lower on this time frame, if it breaks above that, then it's telling us psychologically that the momentum is still driving higher, and we should be looking at potential targets at the all-time highs, roughly around the 1583, 1583.50 mark. Next up is US dollar Swiss franc. On the daily, you can see that price action has been very consolidative recently. We are trading in an area where we've had price support and resistance in the past, noticeably back here in early March through April, and then a resistance level in May, which saw price continue lower. So we are at this crossroads, this intersection. Now we're going to see some sort of price action. Notice we have seen a break higher, and we saw price trading higher. That pretty much didn't go any further than that, primarily because we hit a resistance level in the past at the same area. If I just take that and put it in roughly around the 93.50 mark, you'll see previously we also saw a lot of support and resistance along this area in the early parts of this year. So we saw a pullback, a bearish engulfing pullback to this area here now at the 89.50, which happens to be price support and resistance as well. We saw a candle breaking lower. However, I plotted my upside trend, and that pretty much gauged me that this upside trend was possibly likely to be a thorn in the side. or you could have actually looked at it at the prior resistance level here at the 88.50 as a potential institution moving average below you, a price at the moment, so it's still long-term bullish. As long as it's trading above the institution moving average on any particular time frame, then obviously price action is still remains bullish to the upside. 20-period moving average also just flat at the moment, so not really directive, not showing a lot of direction. But if you're looking to go short here, then obviously the CTC need to be in your favor. In this case, not the case. You might have been able to see an entry closing low and say on the 30-minute, for example. However, your target to the next level, potential level in this case here, the daily resistance level here at 88.50, just would not have given you enough to actually trade lower. If you're trading scalping, if you're a scalping trader, then yes. If not, they're not worth it, and there's far too much potential for a psychological bounce up because of the upside trend as well as the resistance on this level. And as long as it remains above this upside trend, then there's potential for upside movement. 2 days ago we saw bullish engulfing, and which gave us an indication that we could see further extensions higher. However, yesterday's trading range very, very, very small, not very decisive. Ideally, we'd like to see a decision candle. The most important thing at the moment now is the spinning top is, or this doji has happened at the top end of the candle, which is great. Why is it great? It's still above this resistance level here, ceiling level on this time frame here. If you look at that one, if it can bounce off here today and move higher, then great. If you need a bullish engulfing now to confirm that momentum is now still looking favorable upside. CTC is still in our favor overall. We have a red arrow, yes, but we don't have a red candle, and it hasn't gone any further than that. So we're still looking for consolidation with potential upside movement still on the card. So we need a bullish engulfing here to confirm that. However, if we see a bearish engulfing and a break below this trend line, then surely the institution moving average would be our first potential target, or back out to the 88.50, prior resistance and support. So very, very important. Going into today's session, if you can see this 89.50 not being breached, or even better, if you can see price action staying above this little consolidation line. So 89.80, I think it is. So 89.80, let's put that in on our smaller time frames. Let's look at the 89.80. As I mentioned, is that correct? Hope so. Let's have a quick look here. I just want to get this right. I don't want to get it wrong. Let's grab that. So I need to see the high of this candle here. The high is 89.97. 89.97. There we go. So I need to be getting above that area in order to see further extensions higher. Be aware the institution moving average is above us on this time frame. So we know that we've seen the pullbacks occurring because you can see those bearish engulfing candles on the dailies to the downside. So ideally, if it is to remain bullish or to see bullish upside movement, then it needs to be trading above the price support and resistance, in this case the 905 mark. CTC is looking favorable to the downside, and you can see clearly we had a price support here and a resistance. So it needs to be trading above this area here at 89.97. So if it closes above here, then surely we should see further extensions higher. If it stays below this area, then there's potential for further downside movement to materialize, and then we could look at price action going down to 88.90 in particular. We've been there before. There's no reason why we don't have to be there again. So keep that in mind, guys. Keep that in mind. 4 hour, you can see what's looming though. Price support and resistance here at the 8900 quite clearly, but you can see that we are seeing more pressure to the downside. 50-period moving average. Just recently we saw a lot more negative in the market. Yes, we have come from highs that we've seen right up here at the 89.30. Swing low, swing low, swing low. This high, however, still higher than that, but never managed to go any higher. Higher swings, but that failed to materialize, and now it looks like likely we could potentially be looking at 89.90 as our first potential target. So keep that in mind. As I mentioned, these to be trading above 89.70 in order to be still classified as bullish. But then we have this moving average chart, which price support, resistance is there. So going into a lot of consolidation on this time frame. Got to see a breakout higher to see extensions to the upside, break lower than the institution moving average to see further extensions to the downside in this pair. The last pair of the day is US dollar Japanese yen. Yet again another day of indecision. So bearish engulfing, indecision. Oh, we're going to see continuation low. We need to see bearish engulfing to the downside to confirm that, and ultimately your major target would be down here at 76.10. Wow, we've been there before. Bounce, 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 bounce. So this pair, really shocking trading range. Not really much has happened. We've seen a lot of movement across the board on the other three major pairs, but the US dollar Japanese yen is pathetic, to say the least. Moving average is all flatlining, so very indecisive. So consolidating in a downside, well, still downside. You can see CTC is still negative across the board. Yeah, we've had a bit of blue, but that never materialized because we never saw price actually closing higher than either the bodies or the wicks in this case. Ideally, you want to see price trading above all this junk over here, because then we'll be trading in relatively calmer waters. A lot of clean air here, and further clean air up to at least the 80, which will bring us back to the moving average, the institution moving average here at 80. We know 80 because it was a psychological strong support and resistance level in the past. So break above 77.50, clean air up to at least the just below the 7900, and break above that would see further clean air to at least the 80. Between there and between where price is trading now and the 77.50, yes, there is momentum, but we need to see price showing us that on the smaller time frame, and because you have a spinning top on a daily, we need to see potentially either the high or the low of that yesterday's trading range being breached and closed below to give us confirmation that we are seeing further extensions in those directions. So if we to see further extension lower, because we had a bearish engulfing the prior day to yesterday, then we need to see the lows of yesterday being breached, and then we could see which would, where was that, roughly I'd go for 76.60, break below that. You can quite clearly see a lot of support in this area, so got to see a noticeable break below that. Otherwise you could be faked in like what happened here, only for price to move back to the upside. And because it's such a tight trading range, this pair, there's not a lot of room for error. And you've got to be bloody patient, because when you get into this, it takes hours or days in particular to get from point A to B, even though it is only 50 pips away. It's crazy. It's not worth it. This is only for people who don't have time, nothing else to do but trade the US dollar Japanese yen. Rather than put your money in a pair where you're seeing a lot of momentum and positive momentum. You can quite clearly see, if we took yesterday or the previous bounce to the upside and the low, there we go. You can see price action is now trading at that particular area, but we also have the strong resistance and support level below it. So crossroads, bearish engulfing, at least closing below, or closing to the range of at least 76.50. If we saw bearish engulfing to 76.50, great, then we should be looking further negative to at least 76.10. If, however, we saw a bullish engulfing here and a bounce on this area here, then ultimately look at 77.50 as our first potential target. That's it, guys. I'm not going to go into the intraday because it looks like the heartbeat of a hummingbird. It's all over the place, so not worth it. Rather trade the bigger time frames on this pair, get definite buy and sell, and then look to see if there's any confirmation on your indicators, and look at the overall trend of the market in this particular pair. One thing to note, though, 50 period moving average on this pair has acted as resistance quite recently. However, the last week or so we've seen price trading slightly higher. The two price yesterday in particular, we're now trading at the low end of that, of the 50 and the 20 above us. So resistance there again, so psychologically more bearish. However, we do need to see it still can go either way though. We do need to see bearish engulfing either below, closing lower. In my eyes, it needs to close lower than 76.50 or thereabouts, because then it'll be cancelling out that price support and resistance. And CTC is still red. We only got two parts of the overall strategy template here giving us it. So sentiment is still negative, and that should still be reflected on our smaller time frames. So look at your smaller time frames. If we are seeing buy, put your psychological support and resistance level at 76.60. Say to yourself, well, if it's still trading above that, then there's potential bounce higher. If it trades below that at any one stage and closes lower, quite more bearish and negative, then we should be looking ultimately at 76.10 way down as our price support and resistance as our next potential target. Until then, sideways motion, got to be patient, wait for the confirmation and then trade it. That's it, guys. Hope you have a fantastic trading day today. Keep your analysis short and simple. I know I tend to go into a lot of detail, but that's only because I like doing it. Obviously, the more eggs you have in your basket, the more confirmation you have, the more likely it is you're going to profit on those moves. You would like to have as many indicators in your favor or probabilities in your favor. If you don't, then it's just indecisive. You are indecisive, and you have to be decisive when you're trading. So try and get as many, look at it at many time frames. Look at the daily to give you an idea of what's likely to occur intraday, and then look at mapping that on your intraday charts. Have a fun day, and I'll see you tomorrow. Trade serenely.